All right. Hi, everyone. It is Friday, March 5th, 2021, and we made it. And I'm excited to be here. We started these online workshops last year during the lockdown, and it is nice to be here again, less locked down than before, but still doing a lot of things the way that we started doing them last year in terms of real estate. So my name is Danielle Lazier, and I have been a broker associate in San Francisco Bay Area for 20 years now. I've been with Compass for the last 4+, and I work with and run a small team of real estate agent specialists really throughout the Bay Area. Our core group is here in the city, 3 of us, and then we have a partner in the East Bay, in Marin wine country, and about to have someone in the South Bay. And so we do cover the whole Bay Area, but my big main focus has been San Francisco over the last 20 years. So we believe that, keeping things small and personal is really important. Buying a home is a very intimate endeavor. And yet it's also really important to have someone who is super networked and super experienced and has the name recognition with the other agents. And that's true for your agent and also your lender. And so for us, that's why our team concept has actually been a really winning formula, because it is that combination of someone who has, especially on the buyer side, someone who has patience and time to be your boots on the ground, coupled with the 20+ year, brand recognition that we bring to the table to help you get your foot in the door and get that intel from the listing agent and be taken seriously. There is an adage in San Francisco real estate, which I say all the time, because I learned this from one of my managers. That is the question, when is the best time to buy? You probably all want to know. And the answer is 20 years ago. Sorry. What is the second best time to buy real estate? Right now. And so the market is different now than it was 6 months ago. We are having to adapt very quickly to changing market conditions. The feeling of optimism is back, and people want to be here again. People want to buy again. And in many parts of the market, the COVID discount is gone, I'm sorry to say. That doesn't necessarily mean that people are flocking, downtown to high rises. It's not exactly a seller's market there yet. However, even that market is on the mend. Believe it or not, just to give you an example, there have been more luxury high-rise condominium sales, at that $5 million price point since middle of December of 2020 than there were in all of last year. So even that market is on the mend. So before we get started, just some kind of quick stats on San Francisco. Thank you to Noah and what loanDepot puts together. They have great market data. So the San Francisco population is hovering around 880,000 people. It ebbs and flows over time, but that's where we're at right now. And 20% of our population are homeowners. 20%. So that means 80% of the housing market here is rental property. And that is a big reason, a big macro factor of why it is generally competitive to buy here. Now, another interesting statistic is we have an 83% employment rate compared to 61% nationwide. And that's right now. So I want to acknowledge that this has been a very hard time for a lot of people and remains so. And unemployment is not equally distributed. And as you probably know, in the home buying population, we are enjoying very high employment and a lot of hiring. The median home price in San Francisco, $1.4 million. And home appreciation has been 5.9% annually over the last 5 years, 6.5% over the last 10 years, and 6.41% over the past 61 years. Depending on what you want to buy, the market has gotten very competitive. Interest rates have gone up and they are still historically low. So in closing of this intro, you've got to be serious about wanting to buy a home and not speculating. Is this the best time? Am I doing it now or then? You know, if you actually want to make it happen for yourself, you do have to be somewhat serious about it. If it's your first home, it's actually easier. If you're in a month-to-month rental, figuring out the timing is actually a lot easier. You just have to give notice to your landlord when you're in escrow on the new home. If you're already a homeowner, you have big decisions to make. So the tried and true strategy here is sellers move out and stage their property. And that is the tried and true formula to net the highest possible price to do that. Does that mean that you're going to buy first? Or does that mean you move into a temporary place with family or friends or an Airbnb? Or maybe you go into a year-long rental because you're moving somewhere and you're not exactly sure where you want to buy quite yet, and you want to move first. Now, you don't have to move out if you are already a homeowner and you want to buy again. Every year we sell a few homes off market or on the market where the seller has not moved out. This is more for when convenience is more important to you than the absolute best price, because the truth of the matter is that you will second guess your decision and you will never 100% know if you left money on the table by not following that magic formula. So there are options with that. It really helps to have a super responsive team, and that's your lender and your buyer's agent, and your whole agent team working together to come up with a strategy and a plan for you. So let's start with Noah Fierro from loanDepot. What I love about working with you, Noah, is your demeanor. You are exceedingly calm and patient, but you're also really data driven. And you are not afraid to get wonky with your clients. And you have these fantastic, as we'll see, spreadsheets that are interactive that your clients can use to help them make these really big decisions in our expensive and competitive market. And I think that combination, puts you heads and shoulders above the typical lender. So that's why you're here, and thank you for being here.
Thank you very much. I really appreciate that.
So let's get started. So my first question for you is, what has changed in the lending process post-COVID versus pre-COVID? Like, if you've been pre-approved in the past and you didn't buy, or maybe you did the first time you bought, what do you need to know now that is different?
Yeah, definitely. Well, we've seen a big change from pre-COVID to post-COVID in terms of lending. So right when we hit sort of the middle of March, there was a huge sell-off in the market that had a lot of impact on the type of properties that are sold here and the type of financing that goes with those type of properties. Predominantly, jumbo financing is what we have a lot of here based on the price point. So jumbo loans are going to be any loans on one unit properties, whether it's condo or single family, with the principal loan balance above $822,375 here in 2021. So you can imagine that can possibly impact a lot of potential buyers. Mortgage-backed securities have long been traded. It's part of what makes the U.S. market different than any place in the world to obtain a mortgage, is this securitization process of taking debt, converting it to mortgage-backed securities, allowing lenders to keep that off the balance sheet, securitize those, sell them to major aggregators like Fannie Mae, Freddie Mac, and make them investable. Well, when COVID happened, many of the money managers liquidated all of their mortgage-backed securities, and these historically have long been found interwoven into pension plans, mutual funds, all types of different types of investment vehicles. But when that liquidation happened and that appetite dried up, we saw jumbo lending really dry up, and it's still a factor because there's not a jumbo market really to sell to. So lenders have been more cautious. They've been weighing, if I have to keep this loan on the balance sheet longer, what does that look like maybe I need to, implement some different tactics in order to make sure that the borrowers are more qualified, because I may have to hold on to this loan for a longer period of time. So some of those things have changed. Like they're more conservative in general, especially larger institutions and banks who may have a number of people looking to apply. They have pulled back quite a bit in terms of their appetite to lend. Um, where we're seeing the pullback is generally higher reserve requirements. So 1 month of reserves is equal to the proposed housing expenses, the mortgage, the property tax,
Okay.
the homeowner's insurance, and the HOA dues. So that 1 month's worth of payments is 1 month of reserve. And these institutions have said, while there's still people in, actively potentially seeking forbearance, we want to see additional reserves for these borrowers. And so that's an area where we've seen, the post-close reserve requirements be higher, and even some cases, half of the reserves be liquid, whereas traditionally they could have been from non-liquid retirement. We've seen self-employed changes. Obviously, a lot of self-employed borrowers, businesses have been hurting due to the pandemic, and the lenders have, gone more conservative with evaluating those borrowers and their ability to repay, making sure that their businesses are still operational. The other areas where we've seen a pullback has been in a type of compensation that we have here in the Bay Area for many borrowers, which have to do with, restricted stock units, stock options, different
Mm.
types of compensation plans that sort of are popular in tech hubs like the Bay Area, Silicon Valley, Austin, other areas. And not all the lenders accept RSUs now, because the government has looked at RSUs as not qualified income. And so many lenders adopt guidelines nationally, not specific to regional aspects of a market. And RSUs are not commonly seen across the United States, only in certain pockets. In like the Bay Area, we have a lot of our borrowers with RSU income. And so
Right.
this is still a tricky space to navigate. And so, yeah, we've seen changes in many different ways, some limiting the amount that can be financed, some requiring more credit, a depth of credit, more reserves, not qualifying income the way we used to. So many changes across the board.
How many months of reserves is typical right now?
So the most conservative lenders, and everything is risk-based. So obviously, if you can show more reserves, that will be a qualifier for the most conservative lenders. The most conservative lenders for loan amounts, generally up to, a million, million and a half, they may require 12 months. And generally anything over 1.5, 2 million and beyond is probably going to start requiring 18 to 24 months.
And what
Now,
was
there are
before?
options. There are generally always options that are outside of traditional banks, but the most conservative programs, this is what they're asking for.
Yeah, and we've seen that, with our clients, the combination of the COVID changes, and then also I think the refi boom that was started to happen. Some of these bigger banks that were a slam dunk before became a total nightmare to deal with, as they really pulled back on how much they wanted to lend. So wow, a year or more of reserves is a lot in addition to your down payment. So that is important to know. And changes on how stock options and RSUs are looked at. And that's one of the things. So can you speak to, some of us may have seen what I thought were pretty charming commercials for loanDepot on MSNBC. But, what is loanDepot in comparison to, a Wells Fargo or something? And how are you positioned for this type of lending environment?
Yeah, it's a great question. It, really is a differentiating factor, a really big differentiating factor, in fact. And, I've been in financial services and banking for 17 years. I've worked at Citibank, Chase Private Client. I've worked non-bank bank, and really it comes down to a choice of how I can serve more families. If you take the top five retail bank institutions, they have less than 20% of the mortgage market share. So I think the natural feeling is that I will go look for a mortgage for where I primarily do my banking.
Mm-hmm.
And the reality is that that's like working with an institution that does mortgage on the side versus versus working with a company that is 100% exclusively focused on mortgage loan origination, which is exactly what you want in a partner when you're looking at obtaining a mortgage, is a company that is solely focused on that commitment, that is, for lack of a better expression, scrappy is kind of the term that I think about, like who really, this is all they do, this is, and this is what they breathe and do on a daily basis. And that's not the same manufacturing process that comes with the large retail bank. In fact, for most banks, originating mortgages is the loss leader of the retail banking world. And in many cases, they wouldn't do mortgages if it wasn't a requirement by the government, based on their brick and mortar presence. So loanDepot's a full service mortgage bank. We do direct lending, correspondent, and wholesale, whereas a retail bank just does direct lending. And this is really important because the San Francisco market is complex. It's fast. I would say it's the most competitive market in the country. You have other competitive markets like New York City, or different types of markets like in Southern California, but they don't move as fast as Northern California. They don't move as fast as the Bay Area. So coupled with hyper competitive, lack of inventory, then you kind of pair that with, just the fact that our close of escrows historically are under 30 days, whereas in other markets like New York City, they're 60 days plus. So, you really have to have a different type of gearing in order to successfully navigate the purchase market,
fast
because
here compared to everywhere else. So fast.
so fast. And so that's really a key difference, is that our gearing, our manufacturing process, not being beholden to any single investor. We have loans for loanDepot, we have loans for Chase, TIAA, we have lots of different lenders and investors under one platform, where we primarily originate those loans on behalf of all these different types of investors. We process, underwrite, and fund all of those different types of loan products with our own capital, work out the logistics with those investors post-closing after you've successfully bought and obtained your keys. So it's a really big value proposition difference than working with a retail bank that has only one execution.
And you're tech enabled too. You have good systems.
Yeah, that's one of the reasons why I personally came to loanDepot back in 2018, was sort of to self-recruit myself to, being in the Bay Area. Obviously, I think tech is something that I just am aware about, because it's so much around us, so many clients who work in tech, that it's really exciting to be working for a company that's so tech focused, where if not the leader, we must be in the top 2 leaders in mortgage financial technology, employing AI, blockchain, all different types of things we're working with, drones to do drive-by appraisals. It's really an exciting space because, historically financial services has not moved and kept pace with other types of technology. So it's really a fun, dynamic company to be for. We just went public. There's a lot of excitement. There's really a lot of buzz going with the company, and like you said, you started to see our new commercials. So there's a lot of excitement out there.
So what is going on with rates? Now, I don't know if everyone and the consumers know this, but I know rates fluctuate, and that you don't actually get to choose your rate until you're going into contract. But generally speaking, like we've heard on the news, rates gone up. Like people keep asking about this. So what is going on? And then part 2 of that question is, why do the rates, like what's the difference between the Federal Reserve rate, when you hear that on Marketplace or something, that goes up or goes down? Why is that different than the home loan rate that you're going to get as a borrower? I know it's a big question.
Yeah, it's definitely it's probably one of the biggest points of confusion, and we have borrowers all the time who, are almost every borrower asks this question, because I think aspects of it are just misleading. The general advertisement, media outlets, commercials, they have to kind of go behind the curtain as to what they're looking to do. And usually it's to generate leads, and it's not necessarily to provide you with accurate quotes. One thing that is definitely a source of confusion is that people often think that rates are static, or that it's a one size fits all. My mortgage rate is going to be different than your mortgage rate. And all of our rates are going to be different because we all have different attributes and variables. And these risk-based variables have weights to them. And when you add and subtract all of these weights together, that's your rate. It's your rate. It's different than somebody else's rate. And everything from where you buy, the property type, your credit score, even debt to income ratio, whether you impound taxes, insurance, these are all different variables that go into rate. So you can't see an advertisement on TV and say that I can get that rate because those stipulations are going to be different.
Right.
Now the federal fund, now this is definitely something of confusion, is because when people hear like, oh, the federal funds rate has brought rates to zero, why are mortgage rates zero? It's because the Federal Reserve sets the federal funds rate. They don't set mortgage rates. The federal funds rate is a super short-term rate. It's in fact an overnight rate. 10-year treasuries, on the other hand, they last 10 years. Average 30-year fixed mortgage lasts between 5 and 10 years, depending on the market conditions. And investors place different premiums on rates with different terms. So simply put, the federal funds rate is indeed, it's still at rock bottom, but longer term rates are not. Every 25 basis points movement in these bonds and treasuries translates to, either an increase or decrease in rates. And, what we're seeing right now, which is definitely impacting rates, and rates have been steadily climbing since the Capitol riots happened. And primarily, there was a little bit of quiet after the new administration was installed, but, now we're starting to see like the first jobs report came out today from February. It was very strong, stronger than the street thought it would be, all very promising. The Federal Reserve commented yesterday, Chairman Powell, that inflation's up. So the speed of rate rise is definitely notable. Inflation is set to increase. Higher inflation will mean higher rates. Now, the Federal Reserve is still committed to keeping rates low because the job market is strong and they don't want to, potentially trip that up. But generally speaking, more positive news in the economy is going to mean higher interest rates because the technical picture of what's driving that is going to mean higher rates. So, from where we were, just comparatively speaking, we had record low rates in the third and fourth quarter of last year, which people are still mentally clinging on to, but the market has moved. Just last week alone, interest rates moved 0.25% up, and I would say from where we were at the beginning of January to now, they're at least 0.5% higher. So
You're scaring everyone.
I don't mean to, I don't mean to scare everyone, but they're still historically low in context. So just want to put that into perspective because some people might hesitate to buy because they think interest rates are now above 3, but just a few years ago, interest rates were 5 and 6%. So we have to keep that in perspective, and even
really
at certain times,
our market. So
yeah.
In your experience, I think another thing that people think is, okay, rates are going to go up. That means that home prices are going to go down, at least here in San Francisco. Like, dare I ask, what do you think about that?
We just never see it, and the mechanics aren't there for that to happen. And, the reality is that even if you were to potentially hold out for a price reduction of maybe 100,000, the increase in the rates is going to make up the difference, and you're going to be, it's going to be a zero-sum game for you. So, even if that was your prediction, the data does not support that. And like you were alluding to in the beginning, the best time to buy is like 10, 20 years ago. And the reality is that's why people want to own here, is because even if you took a 60-year, 61-year snapshot, it's still about 6.5%. It's very strong compared to the national average, hovering more in the 3, twice the national average.
Plus, you can always refi. I mean, once you're in, that's the thing. People end up refiing over and over again, and it's okay.
Yeah, and interestingly, this is something that definitely buyers they tend to stress, about, is interest rates and what are we going to do with interest rates. And the reality is we can't control that. So it's really best to try and let that part go, because you're not going to be able to lock an interest rate until you have, a home, an accepted offer, and the market will be what the market will be. We don't have any influence over that. But to your point, the average homeowner has roughly takes out 11 mortgages over their lifetime. So I really try and stress to people that, try not to put so much weight on this being a forever loan, because statistically it's not. And just try to find peace with what's going on with the market and look at the broader opportunity, the bigger opportunity. More important than the interest rate is the home and the appreciation that we have, because a 0.5% in interest rate might only be a few $100s, but if we're talking 5 or 6% on, $1.5 million property, there's nothing in comparison to that.
Yeah. Okay, so I want to move to, because I could talk to you for hours, but I want to move to your tools that you have for your, and let's hope that I can allow you to screen share. I'm going to make you a co-host, okay?
Sure.
Should allow this. So you have some pretty cool tools. To the audience, we did not practice this. We should have practiced this, making sure you can screen share.
So yeah, that's okay. We could try it.
If not, we are going to send out some of these items in the follow-up email, so you'll have some takeaways to look at.
Sure. Let me see. Can you see my screen?
No, not yet. There we go.
Yeah?
Yep.
Okay, well, I have many different types of tools, but I picked a few that I think translate a lot to some of the concerns that people have is, how does the rising interest rate environment impact me? And, here's a type of example of, is this big enough? You can see?
Yep, we can see it.
Okay. So like here, for example, I put together a scenario and, I can customize these for buyers, and, we try to take some of the emotion out of it and try and look at the data. At least that's how I try and approach things, because I think once you have the data, then you can make a more informed decision. So some of these things are, if they just live in our mind, then we don't know how to properly quantify them. But you know what? This is something that's very real because we have a rising interest rate environment. So here in the sample that I put together, it was buying a $2 million property and putting 20% down. And, like, for example, if interest rates are at anywhere, today they're probably anywhere from 3 to 3.25, depending on the lender. The MBA forecast today is at 3.375. That's where the average of all lenders are at right now, according to the Mortgage Bankers Association. But if we were at 3% today, you can see how movements and rates go by 0.8%. You can see how each 0.8% movement in the rates would impact your affordability. So in a sense, this is a strong moving target. We have rising home prices and potentially rising rates working in tandem. So it's something we have to be really cautious about. And this is really where I try to use data to help tell the story of what is the cost of waiting.
So this is the loan amount on the left.
Loan amount on the left, interest rates.
Down. Or staying at the same payment per month as rates go up, you can see the loan amount going down, right?
Yeah, exactly. So how it impacts like your buying power. Okay, so now this is why we urge people to get serious about looking, if you're serious to buy, to really try and figure out what are the next steps for you. Because when you don't buy now, like I said, you can lose out in two different opportunities. So the other thing I put together for people is what I would call a cost of waiting analysis, and this is usually customized to the buyer, and I want them to, to their scenario, I want them to see, because if you're currently renting, right, if you don't buy, you're potentially losing in two ways. You're losing with the loss of amortization because you're paying rent, which you're not getting any return on. Whereas if you're paying a mortgage and you're forcing principal into the property, then you're essentially driving equity into the property, which you could potentially take out at a later point. And then on top of that, in a more substantial way, is the appreciation. So we used forecasted data from the MBA to help put this type of data together. So
Mortgage Bankers Association.
yeah, exactly. So while I didn't drive these numbers, these are based off of data analysis. So they could be slightly different than what we really see. But
We're feeling
again,
very bullish on our market.
yeah, well, like if the average historical forecast has been about 6.41, then this is not a bad way to look at it. Forecasted could even be higher. This is the historical for San Francisco as an entire county.
Okay.
So, what I do though is I try to specifically put this together for people to understand that, rates can rise and associated property values can and are expected to rise. So when we start looking at how that impacts people, it just helps to visualize that waiting 6 months, 1 year, 1.5 years, or 2 years, this is where it really can impact you, is not only annual loss in cash flow, which is the money that you're not paying back to yourself, but more importantly, the loss of property appreciation. This is very substantial because really, as I see a lot of the market, any place in the Bay Area, it's really a foot race to get in the door, which is why the best time to buy was 10 to 20 years ago, is because this is what is making the Bay Area for decades now a very well established market to invest in. And it really has become, especially for millennials, it has become like essentially one of the only ways many millennials will retire is by having participated in home ownership in their lifetime, because many speculate that we won't have other types of traditional retirement to lean on. And so this is very important, and I really try to bring this type of data to the conversation so that if it's helpful in you taking action now versus taking action this summer or next summer, that you can see the value in trying to move up your timetable a bit.
I would just quickly speak to that as having someone who's represented sellers for the past couple of decades here. Of course, I have no idea. I don't really know what the future is going to look like. But a lot of the sellers that I have worked with over the past 2 decades who are at that retirement stage, this is their home, is their nest egg, is the largest part of their nest egg. And it has enabled them, it enables them to go and buy a home, often in cash, in the market that they want to retire to, and still have extra on the side. I mean, it's been very powerful to see how this has worked out for people in SF. So I don't want to digress on too much, but just to
add. No, it's a very important point. And, myself personally, I'm a certified mortgage planner. It's something that I do take a lot into consideration when we're looking at using mortgage. It's great debt. It's a great tool to help generate wealth. Being able to take mortgage with this much leverage to obtain real estate and assets that are this expensive can really be a game changer for quality of life later on in life, and just the ability to pursue so many different opportunities. So I think it's extremely important, and that's why it can be extremely consequential to work with the wrong team. The last thing is that I like to prepare for people is just kind of help get excited about what buying real estate could do for them. And so I put together also, one of the things I often put together is the buy versus rent analysis, and it just is helpful for people to see that there's really so much opportunity to buy in the Bay Area. And this one was based on San Francisco, but if I were to choose any county, the results are going to be similar, just because employment's so low here. I mean, employment is so high, unemployment is so low. Just the market generally, jobs market is phenomenal here. So, like looking at renting versus buying, I used a 9-year snapshot, took into consideration, again, historical appreciation, costs to sell real estate, everything, getting investments, there are costs involved with obtaining investments. And, amortization gain, net gain of buying a house, a property like this over 9 years has this potential, even with costs weighed and everything like that, that you can be seeing this type of gain. I mean, this is a real game changer for people. And we'll see many people roll over, their starter home, trade up to a larger home, and really take the gains, the appreciation from these moves, and really put them to good use and set themselves up very well financially. So this is a very powerful set of documents that that I prepare for buyers, and it's not something you will find at any other lender. Generally, they don't have access to tools like this, or it's not part of their process. So
Oh,
I feel like providing this type of data is extremely valuable and helps you make help you as a buyer make an educated decision.
I agree.
Definitely. So
So let's end with that. Um, there's one other tool that we're not going to show today that I can speak to is incredibly helpful. There is a point in your home buying process where you are going to be in an offer negotiation, and it might be at night, it might be on the weekend, it will be in a moment of stress for you where you have to make big decisions between, are you going to become the winner, or is this going to be another property that you almost got but didn't buy? And you're going to want to know, how do my payments change at different benchmarks? If I go up $10,000 or $25,000 because I need to make this my home, what is that going to do to my monthly payment? And Noah also has something interactive for his clients to use so that you can independently crunch those numbers very easily. So I really think that is hugely valuable. So my last question for you is, what advice do you have for a home buyer here in the Bay?
Well, I'm going to keep it short. I think that the market is very competitive, and it really comes down to having the right team. So the team that you need to be successful to buy here, it does not include online lenders, consumer direct platforms, Rocket Mortgage, Better, any of these type of outlets. They don't work here. So if you want to be successful, you need to work with a local lender who has a proven, trusted track record.
Like, they might work on a refi, but it's
It
really
might work.
tough on your purchase.
Yeah, it might work on a refi. It might, and frankly, they do work on refis. It's just that they mostly work on cookie cutter stuff, and we have a lot of stuff that's not cookie cutter here. So, fortunately, because the market is competitive, it gives what I do a lot of job security. And the thing about it is that you really need to find the team that you can. It's not sending something to a portal, waiting for a response. It's, my buyers, like you're talking about, texting me at 9 p.m. saying that they're in a multiple counter offer and I need some help to get over, the knot in my stomach, or I need some help talking through the numbers. I need some assurance. I need some help here. And that's really part of what's important in buying a house. If you're really serious about buying, is that you really need the support, and you need to be able to get a hold of people in non-traditional hours. And that's the kind of thing that I think is really important to winning in this market.
Okay, I think that's a very good point. Thank you, Noah.
You're welcome.
Valuable. I had some people chat that they would love to see these slides. So we will send them out with the recording afterwards. In all fairness, we're probably going to go a little over noon. If you need to bow out for work, because I really appreciate you taking the time during your busy workday to join us, I will be sending out the recording, so don't worry. And if you want to stay, stay. And we'd love to have you stay and chat in any questions that you have as we go. So Eve Fisher. Eve is one of our trusty home buyer specialists on our small team. And what I love about you, Eve, is your combination of tenacity and patience. You are very compassionate and empathetic with your clients, and you are not afraid to tell people how it is and to tell people the truth and to encourage them to do the things that they need to do to achieve the goals that they set forth for themselves. So So welcome and thanks for joining me again for this.
Thank you. I really appreciate it. Thank you for the kind words. And I am not going to share what time I text Noah because that would be unfair to his personal life. But let's just say that I text him all the time. Hey, I have a client. We need to make an offer in 17 minutes. Surely at 7 p.m. on a Sunday, you can help us put together a pre-approval, right? And he responds immediately.
Yeah. And side note, it's always better to be prepared ahead of time and avoid these fire drills. But in our market, sometimes that's just the way it goes, and you have to be responsive. So what are the first steps, in your opinion, for a prospective home buyer?
Sure. Everyone wants to go out and see properties, but that's not necessarily the first step. I think the first step is putting together a good team. And so that is your lender and your real estate agent, who do need to talk to each other. So it's best to connect them pretty much the start, and to make sure that you have, that solid team to support you. And part of why you need a lender, and I know Noah touched on this, but is to understand how much you can afford. And then also understand that there's often a difference between what you can afford and what you want to afford. You may have some crazy astronomical max for some reason, and it could be you just don't want to spend that much. So tell me what you can afford. And then once you have that team in place, that's when we get to do the fun part of the home shopping. And you're probably browsing on Zillow. I like to get my buyers plugged into the Compass search interface. I think it's a little cleaner. You don't have some of the detritus of pre-foreclosures, not really a thing.
And you get all our off-market.
All the off-market, exactly. And we can communicate directly in the Compass interface as well. So you can send me comments any time of the night. What do you think this will go for, etc.
That's a really good point. So in our market, it is not uncommon for our clients to have technical affordability higher than what they actually want for their budget, because the pre-approval doesn't necessarily factor in that, say you're a single parent, or say you want to send your kids to private school, or say you actually want to save up for a home in Sonoma. Other factors that are involved. And so I love how, Eve, you always say, like, you don't need to know, everyone's like behind the veil of their finances, but you do need to know like what you're dealing with, and that people are ready and pre-approved, so that they're looking at the homes that will actually sell within the budget that they can do and want to do.
And, I should make this clear too, because I feel like some people fear this, but when I'm connecting to your lender, we're not talking on the weekends about what your tax return was last year, or, laughing about what your credit card payments are. So I don't know those kind of details. Those are private. Your lender is highly ethical and a closed book. So we discuss what we need to for the offer at hand.
Yeah, that's a good point, because we work with a lot of, friends and referrals from our personal network. And this is a very private thing. And your lender is going to know everything about your tax return. Your real estate agent doesn't need to. But we do need to know, what you're qualified to pay and what you want to pay.
Yeah.
So how long does it take to buy a home?
That is mostly up to the buyer. Of course, inventory plays a role if there isn't anything on the market you like. But if you're serious and you're ready to buy emotionally, psychologically, and financially, it can be a really quick process. I've had clients who saw a place on the weekend and were in contract by Sunday night, and clients who were maybe looking for something more specific or still getting details they're financing together. And it took us 9-10 months.
Right. Like, actually, would you tell us, you just had, the market's gotten really competitive here in the prime neighborhoods, and you just tell us about your clients who are moving up here from LA.
Yeah, they got in touch. They said, we're coming for the weekend. We want to see property. On Saturday, we saw something that they liked. And it had been on the market for a while, but as it always happens, as soon as they decided they liked it, there was another buyer who was interested as well. other buyer, the sellers had to respond by Sunday at 7 p.m. We submitted our offer Sunday at 6:52 p.m. and we're in contract. I'm sorry, maybe that was Monday. It all blurs together. Anyways, it was about 2 days later that we were in contract.
That's great. And then what was the longest period of time one of our buyers took to buy a home?
Probably about 11 months. And that's active. There's plenty of people we've been in touch for a couple of years now, and we never have done, a lot of showings. But in terms of active showings, probably 10 or 11 months.
Okay, great. And how has COVID changed the search process and the home buying process?
It's interesting. So there's no open houses. And I know a lot of clients like to go out and see places by themselves, get an idea, get a wider sort of survey of what's out there. We're not doing as many of the survey visits because it's by appointment only. So we're not seeing places that you might like. If you need a garage, we are not going to see any place that doesn't have a garage. So being a little bit more selective about what we see, which my clients and I have found is not a bad thing.
Why? Why is that?
It's not a bad thing because you're not getting muddled. You're really focusing more, and it's making all of us be more focused earlier.
Yeah.
And so we're still maybe seeing, if they're not decided on a neighborhood, we're seeing different neighborhoods, but we're not going crazy. We're seeing, maybe 10 houses max. And no one has said to me, I don't feel like I didn't see enough, because we're just going through like the disclosures beforehand. So we don't walk into a house and then 3 days later read the disclosures and find out it needs a new foundation. Right. We're doing that research before.
And it's really up the game for listing agents here. We've been heavy into digital marketing for many, many years, but now almost everyone is doing digital marketing much better, and floor plans and 3D walkthroughs and everything. So it sounds like what you're saying is that there's a lot more due diligence done, either remotely online, the client looking themselves to weed things out, and or possibly doing a drive-by on their own just to check out the neighborhood, versus going to 20 open houses every weekend for 6 months.
Exactly. That's exactly right.
Okay. That makes sense. And, technically the rules are, we are still not allowed to have open houses, and we are doing all showings by appointment with no more than 2 people from the same household and 1 real estate agent. That is the technical rules. And you are supposed to review online marketing first to make sure that you actually really want to see it. And you're also supposed to be pre-approved for your loan before you go out shopping too. So I'm not saying there's not people out there who are, doing things maybe a little more liberally, but those are the expectations of the San Francisco ordinance and the real estate community. And we have been pretty good at adhering to them, which means that our market's been able to stay robust. And I haven't heard any chatter of open houses coming back anytime soon.
Only hopeful chatter, but right. And some, like you said, some agents require pre-approval for showing, so all the more reason to make sure that you have that in your back pocket. Mm-hmm. Pre-COVID, I would have said become underwritten, like a few steps beyond pre-approval. I've been told by the banks that they're so busy they're not underwriting until you're in contract.
Yeah, so but you can still have all your documents in. But so this is something I didn't ask you this ahead of time, so it's a little on the fly, but if I was hearing this as a would-be home buyer who didn't know exactly what I want or what neighborhood I want to be in, this might intimidate me a little bit. Like, how am I going to get to know the best choices for me? And I'm thinking about a new client that we're working with now who's not sure whether, a single family home or a condo would work best, and is fairly open to neighborhoods. Mm-hmm. So how would you help someone, with who has that concern?
Right. We will still check out the different neighborhoods. We might not see 6 condos in the outer mission, but we will check out the outer mission. Just yesterday, I was at Great Highway. The clients think they want to be in the center of the city, but thought, maybe we should check it out. Okay. So we went to the Great Highway, 48th Avenue, and checked it out. So we will still do those selections, but it may just be that we don't spend an entire Saturday in that neighborhood.
It's more curated.
More curated. And that's sort of assisted by the low inventory we have now, because we just don't have that many choices. But yes, we're tending to be more curated, really considering the property before going to see it.
And one of the side benefits that I've heard from our buyers is they're seeing property all throughout the week and during the weekday. They're popping out in between meetings to see something. They're going during lunch, and that is giving them their weekends back.
Yeah.
Let's say
we also, the open houses, there were times where we had 100 people in on 2 hours.
Right.
Which ekes me out now. So many people in a closed space. But also it's hard to get a feeling if you're amongst 98 other buyers and we're private and we're sitting there, we're listening. Do you hear the traffic noise? We're sitting there observing the light. So it's actually a more intimate and I think useful experience.
That's a really good point, actually. I'm sure there are people out there who wish that they had got to spend more time alone in the home they ended up buying rather than in a really crowded environment where it is harder to assess some of the less obvious negative features of a property. Staging and crowds can hide. So it probably seems to buyers that the main job of a real estate agent, of a buyer's agent, is to find the property for them, find the listing. And it may surprise you who are listening out there that while the search process is important, it's not actually the most important thing that we do. And so can you speak to that?
Yes. So if you don't have the internet, then this part of it isn't for you, because I will be helping you with your search quite a bit. But I'm assuming you have the internet and you're going to find the listing. You may even find the house that you're going to eventually buy. But it's more of a collaborative experience, the search. You'll send me listings. I'll maybe point something out that you didn't notice. But it is entirely possible that you'll actually identify the property because you have the internet and you can search as well. So what an agent is, it's become a bit more nuanced. I think an important part is identifying the right team members, like I mentioned before, helping send you lender names, never obligated, but it's nice to have some options that the agent provides. Good relationship with the other agents. You want to increase your chances of winning, where they say, I am happy to work with you because I know you're a good person. So that's me patting myself on the back. And they'll say, oh, I know Danielle. I knew her way back when. So I know that she's
pink hair. Some of them like to say.
Sorry.
Some of them like to talk about when I had pink hair. And
there we go.
In jeans to office meetings. I used to get in trouble, you guys, for showing up in jeans to office meetings. Can you believe that was even an issue?
Wow. Now they'll be like, did you put on real pants? That's amazing.
Or designer jeans.
You're not wearing sweats. So that's important. Knowing the market to gauge prices. I call this the price check because I'm corny, but you're going to see a lot of properties. And I wish that there was one set listing price, but there's not. Some agents really like to teaser price it. Some agents hilariously teaser price. It goes by like $1 million over. And some agents do transparent pricing. I should say some agents, but of course that has to do with
some of them overprice.
Some of them overprice. Yes, that is much more rare. That's sometimes it's the agent deciding that. Sometimes it's the seller. The seller needs to move quickly. They say, here's the transparent price, take it or leave it. Because of that, it's really hard.
Insider tip here, guys. I probably shouldn't say this. When it is overpriced, it is often called seller assisted pricing.
Yes. And sometimes clients will be like, it's been on the market 100 days and they haven't moved the price. And I'm like, well, it's either a stubborn agent or a stubborn seller.
Yep.
One of those things. And I'll call and I'll find out whose fault it is. So I lost my thought. Price check. Yeah. So because it's not determined what the list price, there's not a set list price. It's really hard for buyers to wade through these prices and see what's actually in their budget. I mean, if your budget's 1.5, I'll set you up a search up to 1.5, 1,500,000, but who knows where all those will land? And that's where you message me through, ideally, the Compass interface and say, what's the price on this? Where is this going to land? If I was perfect at this, and if I had a magic ball or a crystal ball, I would be rich. But I'm not there yet. So it's not perfect, but I can give you a good idea based on my experience. And I'll be honest, I call Danielle and I call my other agent and I just go, hey, price check on 427 Main Street.
Josh and Eve and I talk a lot about, we have 3, active brains here in the city who are really busy in the market, and we will put our heads together on what we think is happening with the particular listing. And you're also going to look at things outside of your client's budget, because you're able to identify those ones that are sitting on the market and maybe overpriced and maybe missed their moment, and there could be an opportunity.
Exactly. So your search results are kind of a wild west. You'll be like, Eve, I told you my limit was 1.5 and these are posting for 1.7. Well, but then there's the ones that are listed at 1.1 and are posting for 1.5. So we just have to go through it together.
Yeah.
And figure it out together. I know it can be really frustrating for my clients. I also will call the agent. I'll say, this one's tricky. It's only 900 square feet, but let me call the agent. And the agent will say, oh yeah, this happened to me last weekend. We had 100 showings and 48 disclosure packages out. Not a perfect indicator, but I mean, we can tell it's not going for list price, right?
Right. And so much of this, our clients historically get their first offer accepted 90% of the time. And it doesn't mean that they're just wildly overpaying. It means that we do a lot of legwork up front to really educate and get focused on what the best choices are. And then also we really work our network with the other agents and really work our intel so that we can figure out what's going on and try to become the favorite in the eye of the listing agent and the seller, whenever possible.
Do you mind if I share our secret about just before offer time?
Do we want all of our competition hearing it?
I know. Well, let's just say that we will be in touch with the seller's agent throughout the entire process.
Yes.
To make sure that
between bugging people and charming them.
I'm always like, hey, it's Eve again. They're like, oh, hey. But they tell me what we need to know, and just keeping an eye on the pulse, keeping your finger on the pulse of the property. Did it all of a sudden splat and no one's interested? Or when I call 6 hours before, do they have 47 offers already?
Right. And from the listing agent side, it is remarkable to me how different the presentation style is from buyer's agents in San Francisco. Some people do not even communicate with me at all that they're writing an offer, and they don't even check to see if your offer was submitted. I mean, this really happens, and everyone should know that. And then other people, they harass you so much that you don't want to return their phone call. I mean, it really is a nuanced approach. And like Noah said earlier, because our market is so tight, there's probably more job security here for real estate agents than in some other more cookie cutter parts of the market. And that's a good segue. This is probably the self-promotional piece of it in our conclusion here, but there are a lot of real estate agents in San Francisco. I think we're hovering around 5,000. And there's a lot of really good agents, in my opinion. I feel like we're very lucky to work with overall a very educated and dedicated group of real estate professionals. So in your opinion, not just for us, but what does make a good buyer's agent, and what should people be looking for?
Sure. I mean, there's the basic prerequisites. They should seem like a decent person so that they have a good reputation in the community. They should know the market. They should know San Francisco. I personally live in Noe Valley, so I my favorite thing about my life and my job is just driving around the city and seeing, being in it. And having access to off-market, coming soon listings. These are all basic prerequisites. And I think that you should have them. But really what it is, I could talk about myself and how great I am. But really what it is a personal connection, because this is an intimate process and you're going to be spending time with this person. And, it's finding that connection and that trust. Because ultimately, you're putting a lot of trust in your agent, and you're putting a lot of trust that they're going to be just the right amount of aggressive, that they're going to be, as I like to call it, politely persistent. And you just have to have that connection. And it could be that they're a friend. Some people don't like to work with their friends. And it could be that, this is, I'm so sorry, I just lost my train of thought. But it should be that you have this instant connection with them, or this develop a relationship.
The polite persistence, that's a great way to describe it. And that is really key. I see a lot, I work with a lot of real estate agents. I see a lot as someone who, my focus on our team is on listing property. Right. And, the top agents are not necessarily the best buyer's agents. Sometimes, but that combination, and some of them are like me, where they have a really great buyer's agent that they work with. And I think that is the way to go. I mean, whether it's our team or another team that's set up like us, it really is that that 1-2 punch, because the top agents have less time.
Right.
But have the experience and the name recognition, and people want to work with them, that really help. And so it is, I think, a winning combination to have a really dedicated and specialized buyer's agent who's experienced. I mean, you've done a lot of sales, you have a lot of past clients, and you only work with buyers. But to combine that with the additional experience that I bring to the table.
It's a great point. And I like to joke that, buyer's agents are really special. We will sit in an empty condo for an hour just so you can get the vibes and try to, decide, is this right for me? I've had clients that were about to go into the escrow office, and they're, to put it nicely, like having a meltdown. It's like, oh my God, am I doing the right thing? I'm just sitting there listening, empathizing, like, this is scary. Okay, I always laugh that whenever I call and tell people that they got the property, no one ever goes, oh my God, I'm so excited. People go, oh, honey, they accept it. Okay, great. Okay, click.
Yeah. It's a big part of what we do is to prepare people for the negative stuff. Let you know what you're up against really honestly in the beginning. And one of those things is that you're going to freak out. And a lot of times during this process, and there's times that you're going to have cold feet, and knowing what these hurdles are ahead of time mitigates the stress substantially.
And knowing that you have an agent who's not going to be like, what's wrong with you? Just go into that escrow office and sign. To have that empathy and the listening. And I told my clients, I was like, look, we can pull out of the contract. I mean, it was going to be really bad, but if you guys need to, this is what we'll do. And they said, no, we're okay. We're just freaking out. Okay.
Yeah. Okay. It's true though. Our referrals and reputation are much more valuable than pressuring people into something that isn't a good thing for them. No. On that note, let's end with this last question that people, I think there's a real misconception about, is how do buyer's agents get paid? How are you paid for your work?
Sure. So the commission on both ends, for both the listing agent and the buyer's agent, is paid by the sellers. But don't think that means you're getting it for free. It's baked into the price, of course, of the home. And I think that's all I'm going to say about that. It's baked into the price of the home. And it's generally about 2.5% of the purchase price.
Yeah, I think that is a great way to put it. A lot of agents like to go around saying, I work for free. You don't have to pay for me. And this is becoming a bigger issue legally because it's not really true. You are paying for it in the cost of the home, but it's coming out of the seller's proceeds most of the time. And we acknowledge that and talk about it up front, and we formalize our relationship with our clients using a buyer broker agreement that goes over all of that. So I will end with that. This was fantastic. Noah, do you have any final comments or things you want to say?
I think on the point that is really valid is that as somebody who has worked with hundreds of realtors, hundreds of transactions, I've seen so many realtors from the whole scale, from not so great to just phenomenal. And I think that you really want to definitely align yourself with a team that has a reputation, but also has the reps, has the transactions, has the experience, because there are many realtors that I have met over the course, many different brokerages all across San Francisco and the Bay Area that, even don't even do real estate full time. They do real estate part time. They do other things for work. And they, occasionally will help somebody out, or they're introduced by a friend or a family, but that may not necessarily be the right fit for you. You really should take a sincere look at how much business does this team do? Are they well known in the community? Try and do some of that due diligence to make sure that you are working with the right realtor, that you're going to be ultimately successful, somebody who actually has the time and the focus to be able to invest in your journey to become a successful home buyer. So I would just like to close on that, really that's an important X factor.
Okay. Thank you, Noah. So thank you, Eve. Thank you, Noah. And it is a real blessing to do what we do and to be, I can't even believe it, going on into my 20 plus. It's insane to me. And I'm so grateful, and it is a blessing, and it gets more fun every year too. And we get better every year. And so thank you for joining us. We will send out those slides from Noah and the recording. And if you have any follow-up questions, just reach out anytime. And with that, have a wonderful weekend, and we'll see you later.